Hello everybody, I've got a very special video for you guys because on this video I'm just going to focus on Ethereum versus Bitcoin because there are so many things that I need to cover that I don't even know where to start. And the main reason that I want to do this is because I actually had the idea of making a video about, let's say, the flippening or Ethereum versus Bitcoin and stuff like that, potentially maybe like Ethereum fees and all that. But the main reason was actually this very nice video from Crypto Cobain, Hasu and Suzu on Uncommon Core. It has gotten a lot of views already. It's a video that I definitely recommend that you guys watch. It's a podcast, a very nice one that has a lot of information. It's quite long, but there are a lot of stuff in there. I don't agree with all of that, but I like the thinking. They are all of them bright minds, even though I might disagree with some of that stuff. So I will try and go and explain some of the things that I took away from that conversation and some of that stuff that I want to tell you guys. Because I'm actually somebody who likes Bitcoin. I'm mostly a Bitcoiner, and that comes from the fact that I like the stability and I like, the fact that it has an independent monetary policy. It's hard to be changed and I don't risk much with it. Okay, and what I mean is that Bitcoin offers me a stability, offers me an alternative to gold, digital gold. However, there is that aspect of Ethereum which has so many more things that could actually make Ethereum get much higher than Bitcoin. Now, for many years, I doubt that it would be able to get to the digital gold status because it's something that keeps on changing. And because something that is changing constantly has some risks. And especially when there is a centralized team behind it, there are, the more it grows, the more there will be political influences and all that stuff for the direction. Whereas with Bitcoin, because it's very hard to change and it's apolitical, it's way easier for me to be able to think, okay, this is going to stay stable. Now, of course, something that keeps on changing and progressing fast could do much better in terms of price. And we need to be aware of this, okay? So it definitely is a factor that, yes, Ethereum has been outperforming Bitcoin and might keep outperforming Bitcoin for the near future. Okay, so at least as long as it's a bull market. One thing that they said in the podcast was that, when it's a bull market, Ethereum outperforms Bitcoin massively. When it's a bear market, Ethereum almost goes to zero while Bitcoin holds pretty well. And that was the case for Bitcoin versus Ethereum this time around. So it isn't something new. The chart is pretty clear here as well. So some of the key takeaways are that yes, Ethereum can overtake Bitcoin, and what happens after Ethereum overtakes Bitcoin? What happens after the flippening? Well, the flippening probably happens around this price zone right here. And that's why I'm looking at Ethereum versus Bitcoin. So that's when Ethereum almost flippens Bitcoin, or actually does flippen Bitcoin. It's probably around 0.15 to 0.16. And that depends as well. Do you account for lost coins? Because last time, at least on Coinbase, the price got actually higher than this. It almost flipped Bitcoin momentarily, but then collapsed. But what happens if that happens again? Because they said, if that happens just once, then it's a little bit random. There probably was the froth of the first bull market, and that was why, Ethereum made it so high. But what happened, let's say, this time around? Because we kind of know that double tops don't exist. So if it comes all the way up here, does that mean Ethereum is going to overtake Bitcoin? What are the factors that are going to play a role into that? Because right now we have Ethereum 2.0, where only about 4% of the supply, about 4 million Ethereum, is locked. So it's not much, but it's because so much more Ethereum is actually locked on other things. So about 65 billion worth of value, is locked on Ethereum. Now, that's actually a bit lower because that's the total value, not the net value. Because some stuff, with all the lending and all that stuff, that's a bit of excess. It's probably about 50 billion or 45 billion, something like that currently. But if we look at how much Ethereum is actually locked right now, it's about 9 or 10% of the actual supply. Whereas the amount of Bitcoin locked on the Ethereum chain is about 0.8 or 1% of the total Bitcoin supply. It's probably a little bit more, especially depends on whether you include lost coins and all that stuff, which is about 10-15% of the total Bitcoin supply, but it's still 10 times more for Ethereum than it is for Bitcoin. Again, that's on Ethereum only, so it doesn't include other stuff on Bitcoin on other chains, which is a little bit tricky. And it's just something to keep in mind, because more and more Ethereum could be getting locked into those kind of things. And there are other stuff that they mentioned. So for example, the Google searches for Bitcoin are way more than those for Ethereum. It's probably 5 times more. But when it comes to, let's say, the actual volume that goes into Ethereum right now from newbies, from the new people that are coming into the space, is predominantly going into Ethereum. And that's a pretty big thing, because again, most new people are looking for the next hot thing, which might result in a big bust afterwards. But at least for now, we could see Ethereum even short-term flipping Bitcoin. And I'm actually of that view as well. I do believe that at least Ethereum has the opportunity to flip in Bitcoin, even if that's short-term. And I'm going to go through some issues that I do see after the flipping. Okay? Because can it sustain those levels, and why could it potentially fail and go down again, and what also that means for Bitcoin? And that was one of the other key issues that they mentioned is, okay, if Bitcoin loses that status of the king of the market, then what does that mean? What happens to Bitcoin? How does the market change after that event? And it's actually a pretty big thing, because then it could be a big blow on Bitcoin's scarcity, on Bitcoin's narrative, on anything relative to Bitcoin, because most people will want to go to Ethereum. Now, Bitcoin will have its place. It will potentially still outperform gold, which is what they actually said as well. It has the potential, because again, same way that I see it, Bitcoin is what gold could be. So 10 trillion of market cap is too little for Bitcoin. At least that's not where I do see its potential future. I do see it as something much larger. And that's potentially true for Ethereum. Now, Ethereum has a lot more use cases, a lot more stuff going for it. But again, it's something way riskier. And that's what I'm going to explain later on. And that's where I do see the future for Ethereum being a little bit more murky than those guys. Because at least what I took away from it is that they were way more bullish than I am. So yes, I do believe on the flippening. But then for the potential future, I do not share the same views. Okay, and I do want to say, go watch that interview, because I'm paraphrasing. It would be great for you to just listen to the actual podcast. It wasn't exactly an interview, it was more like a conversation. So of course, just go and listen to it. So again, that's the search volume for all that stuff. And the other thing was that, at least for now, Bitcoin is about 15% of the trading volume. So more like it's a major pair still, whereas Ethereum is not. However, there are more and more people that are increasingly using Ethereum for DeFi and all that stuff. So that's how they measure the wealth. They measure the wealth in Ethereum. And in the past, for example, Bitcoin was about 50% of the total trading volume, because most people could only use Bitcoin to trade other stuff. But now, with the rise of USDT, that use case for Bitcoin has gone away. Also, at some point, most contracts were denominated in Bitcoin. So for example, if you want to trade on BitMEX, you had to use Bitcoin, and on most other exchanges, you couldn't really trade USDT perpetual swaps, whereas now that's an option. And that has also been kind of a bit of a blow for Bitcoin, because if Bitcoin was that rock, was that main thing that people had to use for crypto, then its value would have probably been much higher than it is now. So one of the biggest things that have kind of helped but also hurt Bitcoin adoption has been Tether and stablecoins. But overall, I would say it's a positive thing, because the liquidity has improved. Now that we know that Tether is not a scam, it's something that I've been saying for a very long time, but people kept saying it's a scam. But now we have multiple confirmations that Tether is solid, that it's backed, and there is no issue with Tether. But again, it is a bit of an issue for Bitcoin. Now, one of the things that I forgot to mention, and I actually didn't know in the past, was what would happen with the Berlin hard fork, the hard fork that I had a few weeks ago. So initially, I thought that it's just going to be an upgrade. There are going to be some issues solved, but I didn't know that it would be a performance upgrade. So most of the stuff that I say, guys, I usually have mostly a technical background. I try to keep up with some of the fundamentals and some of the stuff that are going on in the space, but I'm not, as active in just going out there and seeking a lot of information about each project. There's so many things going on that's almost impossible to keep up with everything. So again, that's why I usually say, if you want to say something in the comments, if I forgot something, if you want to share some information with me, maybe something you want me to look into and make a video afterwards, just let me know and I'll go do it. So with the Berlin hard fork, there was such a big improvement that fees dropped substantially. And that's what, in my opinion, has been part of this rally. Because now that the fees have gone lower, the narrative for Ethereum has gotten stronger. And the actual fees have dropped quite a bit. And we can actually see that because now we can see that there are more Ethereum transactions in the network. And I don't think that before that people didn't want to make those transactions, but it's just that now these transactions are possible. Okay, and that's why the fees on Ethereum have dropped substantially as well. And now we also see more active addresses in the network as well. So these are hitting new all-time highs. Whereas if we look at the same stuff for Bitcoin, we do see that there is a little bit of a drop there. Okay. So a lot of positive stuff for Ethereum, especially with the Berlin hard fork, because that allows for more transactions to happen. And with the next hard fork, I don't know the actual name, but when we have the hard fork in June or July, where the EIP 1559 is going to take place, then that's another big thing that's going to be actually making Ethereum even more scarce. And that was actually one of the big topics in the video too. So with having more transactions possible, that fee pressure being alleviated, that has rekindled the DeFi boom. And that, although I made quite a few videos on DeFi, I was actually quite bullish on Ethereum and all that stuff technically, I just didn't know whether that was going to be sustainable due to the fees. And when I realized recently that that issue is not that big anymore, then I realized how much more Ethereum can rally right now. So until we get to the point where things get really clogged again, where the adoption will hit bottleneck once again, because that bottleneck is going to be reached at some point, because again, it's not about infinite adoption or infinite, block space for right now at least. This is going to hinder the adoption for Ethereum, and that's going to make more money flow into other layer 1 protocols and stuff like that, which is another topic we're going to touch very soon. But before that, let's touch a little bit on what's going to happen with Ethereum 2.0, with the next hard fork, and in general with the scarcity of Ethereum. So when it comes to the fees getting burned rather than going to miners, that means that a lot of that supply is getting lost, essentially, is getting away, and it's not able to be sold by miners. Whereas right now, miners gain that money and potentially can sell it. Now, many of them are keeping that money potentially because they are thinking about staking in the future, but still the sell pressure is relatively high compared to, let's say, that supply being burned. There's a big difference there. And right now, about 40% of the total mining revenue comes from fees alone. And at some point, it was more than 50% for a whole month. We also see the hash rate is increasing because Ethereum has a very different mining algorithm than Bitcoin. So the mining adoption, essentially, the mining expansion, let's say, has gone much higher for Ethereum. Of course, these miners are going to have a fairly big issue at some point when we switch to proof of stake. But up until then, they can make a lot more money, because right now, the more Ethereum is getting used, the more money they can make. And the more the price goes up, the even more money they can make. So right now, Ethereum has about 4% inflation rate, and in the future this could potentially drop even more, especially with the demand from staking, and potentially the staking rewards are going to be 1 or 2% per year. But now think about this. If the fees right now are about 50%, and it could eventually get even higher than this, then that means that about 4% of the total Ethereum supply per year could be getting burned. So even right now, the Ethereum the Ethereum inflation could go down to zero, given how this is going to be happening, because we're going to have supply getting burned, which is definitely lower than the Bitcoin inflation rate, which currently is at about 1.8% per year. So that decrease is definitely a massive boost for Ethereum. And then what they discussed in the podcast was, if we include the demand, essentially the scarcity from the staking of Ethereum, which could be 50, 60, 70, or even 80%, we're talking about something even more massive. And now if you add also the DeFi use cases and all that stuff, the demand from people having to have Ethereum to use the Ethereum network, then that goes even higher. So essentially the drivers for Ethereum could be even bigger than those of Bitcoin, at least when it comes to pure supply and demand. And if newcomers also prefer Ethereum, then that also gives them a bigger and bigger boost. Again, these are the stats. You can look at the blog, very good website. I would recommend you guys to go and in general check all the stats. Some of them might be lagging a bit, but overall it's very good. Now Ethereum hadn't even reached the point where it was like with the active addresses from 2018, but that was a massive bubble, the ICO boom, whereas now the fundamentals are a lot different. We can see that this is steady adoption rather than a random bubble. That's very, very different. And that's why we also see that in the chart as well. So if you see this, Ethereum had that massive boom, that massive bust, but now look at this versus Bitcoin. It's been on a nice and steady uptrend for quite some time. And from its bottom in September of 2019, it's already up about 200% or more, about 210%, maybe 220. So that's a very, very big difference, guys. Now we do see a nice solid base and a nice solid increase in the price of Ethereum. So if I would look at the technicals, this could be one of the things that happens, because look, right here we have this inverse head and shoulders pattern. We initially had this drop because we had the high fees back then, really high fees, more coins started pumping except Ethereum, so DeFi and Ethereum were the main ones that went up. But the thing was that they were also coming from a big boom over the summer, so it was kind of hard for them to have a second big boom without any of the other coins to go up, because many other coins, instead of bottoming right here or at any time between, let's say, September of 2019 to potentially January of 2021, because they hadn't bottomed at that time, because they kept dropping, they were a lot cheaper, at least versus Bitcoin, and that's why many of them had massive pumps, whereas Ethereum and DeFi took a back seat. And that was also a bit of a size issue, because that market had grown quite a bit, and the Ethereum fees bottleneck was an issue. Right now that pressure has been alleviated for sure, at least to an extent, so that's why I do believe Ethereum could go much higher in the short term. But when it comes to technicals, when it comes versus Bitcoin, this could be the main resistance that we have, plus this R3 pivot. It shows that we have to deal with some resistance right here. But after that, the next resistance that I see is about 0.068, and then those levels are the next ones. But again, right now Ethereum is about 200% from making a new all-time high versus Bitcoin, or essentially about flippening Bitcoin. And that's very big. That's very, very big, guys. Because this base right here This is very important. I cannot see this base getting broken anytime soon. Like something big has to happen for Ethereum to sort of collapse versus Bitcoin. Because here the CME news also played a role. And now though, with the CME futures, that's an extra demand catalyst for Ethereum. We see this nice and steady trend. We see that we are above the 300-day moving average, which we have tested several times. And at some point, I'm going to show you another chart as well for Ethereum BTC on Binance so that I can show you something regarding the volume profile and where we were. Now, the price didn't come all the way down to the yearly pivot. I kind of had expected this to come all the way down here, but I didn't make it. I thought that these double bottoms here would have been swept, but the upgrade for Ethereum also played a role, and that's why I do think we bottomed a little faster. So that's a good example as to why sometimes certain things, certain catalysts can play a role, and they can alter the chart, or at least our expectations for the chart. Maybe, for example, up here, if it wasn't for the Tesla news, if it wasn't, let's say, for the CME futures, if it wasn't for the high fees of Ethereum, if it wasn't for other coins beginning to pump, Ethereum potentially could have made it all the way up to this resistance level of 0.051 to 0.054. But I do believe that potentially after that we can go much higher, because even if we just take this inverse head and shoulders pattern, if we just take this and we expand it here, then that's our main target right there. Now, could we have a little dip first? Yes, of course, because again, we've had several of these corrections before for Ethereum. That's about 45%, that's about 35%. That's a bit less, that's potentially 30% or 25%. But we have seen lots of these corrections between Ethereum and Bitcoin before. And again, maybe we do have some major demand catalysts for Bitcoin as well. So when we compare Bitcoin and Ethereum, if we just forget, let's say, the technicals for a bit, because I've spoken about them quite a bit, let's forget about, let's say, the performance differences that we got recently because of the Berlin hard fork. If we forget, how much more Ethereum is being used, okay, that's about being used, not the demand of people holding Ethereum. Let's say, if we, let's say, forget all that stuff, then Bitcoin has that main network effect, that has that first mover advantage, the Lindy effect. It's the focal point, it has the Schelling point. It has some use cases as well, like it's more used for trading, okay? It's the one that institutions have more access to, and that has changed dramatically recently, or at least I would say through the years, because in 2017, 2018, most people had access to Bitcoin. Most people would have to go buy Bitcoin first before buying altcoins. Most people just knew about Bitcoin in general. And overall, there had been a lot of issues with Ethereum, okay? And there have been issues with several of the upgrades. We've seen hard forks being postponed because of some issues. We have seen some clients not function properly. We saw that with Open Ethereum as well recently. So when you have something so complex as Ethereum, you will run into problems. And then it comes down to, is the move fast and break things approach better than move slow? The move slow approach and slowly build stuff, be stable? Because with Bitcoin, you cannot really fail. There is no centralized team behind it. There is no foundation to just say, okay, we've got all that money, we're just going to fix it. There is nobody that, let's say, people would look at in case of a massive failure that would restore the network properly. So if it goes down, it's very hard to recover, and it will be a very big blow to its image, especially as digital gold. So Bitcoin cannot afford to move fast and break things, but the same situation will happen with Ethereum at some point. The more Ethereum grows, and that's why I do have that kind of limitation for Ethereum, because the more it grows, the harder it will be for it to upgrade, and then its competitors will come and will give better opportunities for people. It will essentially, especially over the bear market, its competitors will buy time to do the same stuff Ethereum might have been doing and do it better than Ethereum. So there is a lot of competition coming for Ethereum as well, from Cardano to Polkadot to Solana. So there's all this competition waiting, and even Binance Smart Chain. So we are seeing some of the centralized stuff also gaining some of that adoption. Now, one of the things that they mentioned in the podcast was, and that was an argument against Binance Chain, for which I agree, is that for how long will regulators leave them alone, given that they are centralized and a lot of the stuff on Binance Chain are very scammy? So what's going to happen when it comes to that? But the same argument in a way applies to Ethereum, or obviously to a much lesser extent, because Ethereum, at least the network, is decentralized. However, it does rely on certain people to, let's say, tell others what to do. Now, at some point, maybe Ethereum has reached a certain level where it stops upgrading. Same thing I do expect that it will happen for Bitcoin as well. Now, many people have had expected Ethereum to collapse much faster. I did have kind of that expectation with the previous bubble, that I thought in 2017 Ethereum would flip Bitcoin, then it would have lots of catastrophic issues and then it would fail. But then I thought back then there was not enough usage of Ethereum, whereas now Ethereum is actually being used, and with so many things being built on top of Ethereum, if there is a catastrophic bug, then imagine how many things will start cascading, how many contracts will go bad, how many things will start breaking, because we currently have something like an interconnected mess of things. Like a lot of contracts start relying on each other, a lot of contracts are communicating with each other. So if something goes bad on the Ethereum network, especially just consider when Ethereum has to transition to proof of stake, how messy that could potentially be. Because how do those contracts settle? What happens, let's say, if some people don't upgrade on time, or they are not aware of certain things? And again, just one bug, one consensus failure, even if it just happens on a certain smart contract, that could just take off, and it could cascade and have a massive issue for Ethereum, which would be a big blow for Ethereum's reputation. And then people have someone to point at, the Ethereum Foundation. What happens when state actors take over? And that's a very big risk when it comes to Ethereum, or any centralized chain for that matter. What happens if there are demands for KYC? What happens where there are way more demands? Because these are real people that are in a certain place, that have a position of authority in Ethereum. Because again, they are the Ethereum Foundation. They are the ones that they are the ones that raised the money. They are the ones that hold so much Ethereum. I think it's about 400,000 Ethereum, which is a pretty substantial number. So we do need to be aware of these things, okay? We definitely need to be aware of the issues that might arise at a higher market cap. Also, with proof of stake, there are a lot of issues. It's an untested technology. Well, it's getting tested more and more, but the reason why people have kept testing and reiterating proof of stake is because they know that there are some fundamental flaws with proof of stake that they need to kind of cover with some other things to kind of protect the network by adding more layers of obfuscation on top when it comes to proof of stake. So with those, let's say, networks, we're not as aware of the potential issues they might have, because again, they are at that centralized point where people, even if they did attack them, they wouldn't really gain anything because the market doesn't care. But when it comes to Ethereum, where it has so many use cases and so many things being built on top, a failure of that magnitude would be very catastrophic, especially when it comes to slashing. You know, what happens if some people get slashed and that wasn't actually the fault? Then what happens, with all the incentives? We get stuck in a network where the rich get richer. So for you to participate, you actually need to pay somebody else. So it becomes a little bit of a Ponzi, rather than you being able to use other resources to participate in the network, like with Bitcoin. So yes, to an extent, it does help the network grow when it comes to proof of stake, because all that money stays in, and that was a point that was raised on the podcast as well. So a lot of that money stays in the network, so the inflation rate stays in. But think about this. So the people that gain money are the people that just have money. So it's just plutocracy, it's aristocracy again. It's people who cannot, let's say, do anything else to join the network. So nobody else can take that money from them, except if they spend it. But if they don't spend it, then they just keep on getting richer. And then the people that hold the money just keep on getting punished, even if it's not, even if they're not using the network. If, let's say, they don't want to risk the money staking because they are not sure if they want to trust a certain provider, so they have to go actively and stake, which has the risk of slashing if something goes bad. So what's the point? So you're risking money, and then if everybody's staking, then there is not really a gain about anything, because if the supply is getting burned of the people using it, then why would you be staking to gain 1%? And even that 1% goes to zero, because if everybody's staking and nobody's using the network, let's say, or even if it's just like a very large number, then you're gaining nothing from staking. 1%, what's the point? And even if it's larger, it just becomes a number. If everybody's taking, regardless of whether what you're gaining is 1, 10, 20, 100%, it becomes almost irrelevant the more people are staking, because everybody's gaining the same rewards. So again, I don't want to go too deep into other issues as well, but trust me on that, the more the network grows, the more it will face certain issues. And that's why it's good to kind of have a balance between Bitcoin and Ethereum. I do know and I do see Ethereum outperforming Bitcoin, although short term we might have a pullback because Ethereum has rallied quite a bit. Maybe other coins take the place of Ethereum for now. So that's also something that's quite possible for now, at least. But, you know, it's something that we need to be aware of, guys. There are lots of issues with Ethereum. There are lots of issues, I would say, with Bitcoin as well, at least in terms of adoption. And also, just think about this. The richest people right now, at least for the foreseeable future, will potentially prefer Bitcoin over the Ethereum because of the risks Ethereum has. And why Ethereum will not choose all the other networks that are out there. Or why, let's say, not buy Bitcoin alone, which has been underperforming Ethereum, so it's actually cheaper. So some of these people might actually prefer something that hasn't moved as much as Ethereum has. And again, it just comes down to when the ETF is going to be approved. I do expect Bitcoin to outperform Bitcoin for some time. Now, we potentially will see an Ethereum ETF in the US as well, because we've already seen an Ethereum ETF in Canada, which I also believe was part of the reason why Ethereum has had this rally right here. So it was a combination of lower fees, the CME thing playing a role, some money flowing back into Ethereum after lots of altcoins pumped really hard. So after the correction, a lot of money started getting back into Ethereum. Ethereum started getting into its own trend because people started using it more, people started becoming more confident on it again. So that played definitely a role in this rally. I don't know how sustainable this rally is. I do believe that this is the main target right here. That was the last major breakdown. Potentially the resistance is right here, the next one, the other one is right here, and then we do have the final resistance right here. Because again, I do believe that once we start going above 0.1, and that's another point raised by Suzu and Crypto Cobain, is that it's probably going to become very hard for Ethereum to be stopped and not overtake Bitcoin. Now, again, that's probably going to be something short term, with short term potentially being a few months, but it's definitely, or maybe even a year, but I don't expect it to hold forever. Now, the base potentially afterwards might keep getting higher and higher, but for now, I would just say watch this level, potentially watch this level as the next one. And the other thing that I would want to say is, and finish with that, would come a little bit to the cycles of the market. Because so far, Bitcoin has been the main thing for the market. It has been the main driver of the market. We usually have Bitcoin bottom first, then we get a rally, then we get an alt season, a major alt season, because we do get little alt seasons or alt windows depending on how you want to see it. But the main thing is that we have Bitcoin bottom, then we get a bit of a pump around the halving, so we get an alt season around that time. So once Bitcoin bottoms and people become more confident in Bitcoin, there is an alt season. Then there is the alt season after Bitcoin breaks the all-time high, which is very, very large. At least the 2017 one was the largest, at least the initial one, and I'm going to show that in the chart as well. And then we have the final one, which is after Bitcoin has had its blow off top, and then everything just moons very, very hard. But this time around, we have a different set of conditions, and that is that we started from actually making consistently lower lows, whereas back in 2014 to 2017, the altcoin dominance kept growing because there were more alts coming into the market was younger, and there were a lot of things, especially with ICOs, that led the market to have this massive pump. Now that one lasted for about 6 months, let's say from this bottom to this top, that was about 6 months. Now this rally actually lasted for about 4 months if we actually exclude the first part, assuming that it was not the bottom. Again, I'm assuming that that was not something special. Again, that was the bottom. After Bitcoin bottom, they had the rally, then alts took off around the halving. Alts started dropping slowly. They did have a correction. Ethereum had major issues, lots of attacks on Ethereum, the Ethereum hard fork as well. So Ethereum survived that time. Then we had that mega pump, the first phase, and that's the December-January alt season. So you see that this part is usually the largest. So potentially you could see this alt season, the summer alt season, as the first one. And then this is the actual key alt season. So we also started from having this little thing of actually higher highs for altcoins. That was the summer alt season. These were just like a few really small alt seasons. Essentially, they were just bounces. But we didn't have that massive capitulation because Bitcoin had all the attention. We had the capitulation of XRP. XRP dying was a key catalyst as well. Essentially, not dying, but the lawsuit of the SEC pushed it lower. Now it did come back to this nice trend from back then. Now, of course, it's not perfect, and it also almost reached those key highs. Also something that is very, very important. So if we exclude, let's say, stable coins and all that, right now, I don't believe that the market cap, the altcoin dominance has breached 50%. It's probably around 49 to 48%. It's probably a little bit higher than it shows here, but I do believe that it almost touched the highs of 2015 to 2016. And back then, if you think about it, there were probably 90% less altcoins than there are now. So the difference is massive. Not only there were fewer altcoins, but their inflation rates, the actual supply was much smaller. So getting almost to that point, that was an insane capitulation. And now we do see proper adoption of altcoins. Now, of course, it is a bubble, it's going to be a frenzy. A lot of those altcoins, 99%, would probably go away. Once again, a lot of those altcoins will not be able to capture value for the tokens because they don't really have proper tokenomics, as people say. Maybe some of them will merge. I do believe that some winners will take most of the stuff, so it won't be, let's say, 100 different alts doing the same thing. But for now, we do see a very, very nice and steady trend, which is very different from this explosive move right here. So instead of having, let's call it insanity, right now I have something way more sane, way more stable, way more, it just makes sense. Okay, it just makes a lot more sense than this made sense right there. So what I would say right now is that we are in this stage of the cycle. So if we compare it to previous alt seasons, we've had the first two major legs up. So if we look at, let's say, the period of May 2020 up until September of 2020, beginning of September of 2020. Right now, we are probably at the same level as we were in August of 2020. So there is a lot more potential for growth for alts. And I'm going to make other videos to talk about other altcoins, but this is what I want to mention for this one right here. So again, we usually have that capitulation. We have that sideways movement for alts. We have that like initial bottoming process, and then alts start going up. So we have that formation. You see it all the time right here as well. So potentially you could see it from May of 2019 to August 2019 or September 2019. That's the bottoming process. Then we do have a little timid alt season. Then you have the last phase, and then you have the collapse. Same thing right here. 2018 from, let's say, June 2019, we have the same process. Right here we have the bottoming process. Then you have a few little alt seasons. Then you have the last big phase of the alt season. And I do believe that right now we're going into that last big phase. Now in here, because we're looking at Binance, and the boom was really in DeFi coins, in Uniswap coins. A lot of those coins had not been listed on Binance at the time, so that indicator was not able to capture that action. But I do believe it actually went much higher. We did see tons of blow off tops in that period. So I do believe that we're going to see something similar over the next 1 or 2 months. And again, guys, it will all come down to, a lot of things will pump, and then potentially the catalyst for the Bitcoin rally might be the Bitcoin ETF. Because you have 8 applications right now, eventually it will come. Most of nations, most of, big players will potentially prefer Bitcoin. Maybe right now the retail drives the market, but once the retail juice kind of dries up, a lot of the whales will go back into Bitcoin again. Because if you follow the cycles, you know how this plays out. Now, it might be different this time. It might be. I'm not saying it won't be, especially because of the rise of Ethereum. So I'm always open in things being different. I'm also being open into me being wrong about Ethereum collapsing at some point after it grows too big, or at least maybe just have a massive collapse, but then it kind of recovers. But again, this is my expectation, guys. Again, I'm always open to being wrong. These are my interpretations. I'm just looking at the data. So if I would say what the bottom line is, I do expect Ethereum to do well. I do expect Ethereum competitors to do even better, especially once Ethereum grows a bit and fees get really high once again. I do expect then Bitcoin to do very well once we get very high in the alt season. So yes, it might be an altcoin super cycle regardless of what you want to call it, because alts have already been rallying for about 4 months. That's a very long time for an alt season, but that's why I do believe that in potentially the next 2 months we will see altcoins stop and then Bitcoin take over. But until we get to that point, we might see alts rally very, very hard. So the next month could be very explosive for altcoins. Again, there will be many different narratives, many different coins pumping. Right now we see DeFi coins go well. We see NFTs do well. We see all sorts of coins do well. We see Binance Chain do well. So rather than having just one narrative, we see lots of different things. But I just want to make this one specifically about Ethereum, because I did believe that the most juice was on that topic. That podcast gave me a lot of thought, that get a lot of food for thought, and that's why I want to put it all together. So again, guys, study this indicator, study the market cycles, be a student of the market, always be open into being wrong. Also follow the technology. If that's your what you do best, then go for it. I'm a bit less on the fundamentals nowadays, so if you have any questions or any comments, just let me know. It's just always helpful if you leave a comment and you tell me what I got wrong. Maybe I do get your feedback and I'm able to make a new video. Maybe I get some information that I didn't know and I can help you better with that. So once again, guys, thanks a lot for watching. Please, this is no investment advice. These are just my opinions. Don't just follow me blindly on anything I say, for any coin that I say. These are for educational purposes only. I have to make it very, very clear. And I don't say that just to just say, okay, I have no, let's say, issues with saying wrong stuff. I don't want to tell you any wrong information, but I want you to think for yourself. It's not that I will have some issue with, say, the law or anything, but you have to be aware that you need to be your own trader. You have to be your own investor. You have to be your own manager. Nobody else is going to do it for you. And listening to others is just a recipe for disaster. So once again, please like, subscribe, leave a comment down below. Come follow me on Twitter, follow me on TradingView. Just come join my Telegram channel where I have most of the updates right there. Because again, these videos tend to be quite large. At least some of them are smaller, but this one was pretty large. So for me to give an update on my thoughts on this one, it's gonna take a lot longer, okay? So once again, guys, thanks a lot for watching, and I'll see you on the next one.